Hi everyone, today let's talk about the non-farm payrolls, then we'll get into the economic data, as well as a brief look at the charts. Then we'll finish up with my results on the day and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So payrolls went up quite a lot despite the ADP non-farms being lower than expectations, but we did see the unemployment rate tick up slightly to 3.8 versus the 3.7 and the forecast. Hourly earnings rose by 0.2%, which was better than the estimate as well. The expectation for non-farms was 170,000, and we just about doubled that. Quite a bit higher than the previous read, about 100,000 more than the previous month. You can see that big step up here. And this might be revised down in the future. We've seen a couple of revisions where these numbers get a little bit lower, but this was a substantial step higher here in September. Could be a seasonal thing as we move closer to that Black Friday and holiday sales where people start to open up more jobs and hiring. But either way, we are seeing higher numbers of hiring, and that was not exactly what the market wanted. We did see a pretty significant downtick on the news itself, but then we ended up rallying into the session. We'll take a look at that on the charts. In terms of a slowdown, basically we're seeing no slowdown, especially in the jobs market, and they do mention that here. In terms of payrolls, like we said, this continues to tick down. That is what you want to see from an inflation perspective, and this trend so far looks good, going all the way back to March of last year. Moving over to the economic calendar, you can see that non-farm payroll 336 versus the 170. Private non-farms also quite a lot higher here. Unemployment rate continues to step up. It was the same as the previous read, which is interesting, but it was expected to step down slightly, and then hourly wages doing better here. Moving over to max pain, we were sitting at 425 for the Friday session. We ended up closing all the way up at 429. Massive rally on the day. Couldn't get above this call wall at 430. Makes sense. Finished right in this range here between 425 and 430. Right at the top of the range, really, right in that dip low. Total options, 1.3 million, not a ton on the day. And you can see a lot of calls coming through here today. 1.3 on the put call ratio, much higher than we've seen in a while. Moving over to the charts on the hourly and the daily. On the SPY, you can see that dip low on the unemployment data, touched these previous lows and then rallied super aggressively throughout the day, broke multiple levels, 425, 428. Now we're between that 428.59 level and 431.71. Definitely an interesting zone, got above trend. Looking at the daily chart, you can see what that looked like, getting very close to that 200-day moving average. Ended up breaking the 144 in the 9 EMAs. Momentum continuing to tick towards bullish, and everything says that we're going higher next week. Moving over to the NASDAQ just for a moment, very similar thesis, dip low, touched these previous levels, rallied up super aggressively, took out multiple levels, did get above 364.84 just by a few cents there, definitely interesting. You want to see it hold and rally up to 367.63, certainly possible. But this was a pretty aggressive move. It wouldn't surprise me if we got at least a little bit of a pullback. We did get daily momentum ticking into bullish here. RSI looking very clean, definitely an impulsive move, taking out these previous highs at this midpoint on the daily chart. And everything looks bullish here, just like we talked about on the SPY. Moving over to the Russell and the Dow. Russell rallying up, took out my level at 172.60. Holding right at 173, touched that 9 EMA. It's got a little bit further to go before this trend starts to change a little bit, but momentum doing the same thing as everything else. Dow, similar thesis, ticking towards bullish, big move higher, right at the 9 EMA. Need to see it get above 335.91, hold that level, and then start that rally back up. Everything looks clean here in my opinion. Moving over to Apple and Tesla. Apple confirming the rally here today, up almost 1.5%. Right to that highly traded zone. Really needs to get above 178.58, certainly possible. But bullish momentum, bullish RSI. Both of these look bullish. Looking at Tesla, basically unchanged after dipping down to the 9 EMA. But bullish momentum, again, you really need to see this breakout. 164.68. Trend line just behind that at 166.89. If we can get above that and hold, we could look for 280. And then above that, I have 302. Moving over to staples and discretionaries. Staples finally hit that level, 66.27, threw a massive wick through it all the way down to 65.22. Ended up holding that level and rallying up a little bit. If this is going to hold, could be an interesting level to trade from. Obviously, the structure is still very bearish, but signs of life at a strong support level. Discretionaries, similar thesis to everything else. Big gap down, rallied through the session, took out a level here, but really needs to get above 162 to confirm this rally in my opinion. Moving over to yields just for a moment. Both of these were still bullish here. Interesting considering that the equities were pretty bullish across the board, but yields right at this previous high, throwing another wick into that zone here on the 10-year. 2-year continues to chop in this same zone, right around 5%. Moving over to the dollar, big pop on the jobs data, hit that level, broke down really strongly, allowing equities to go higher. We're right at trend support here on the dollar on the daily chart, but we did get bearish momentum. If this 21 on the daily breaks, that could be a very interesting development. Pull back down to the 55 EMA all the way down at 104. That would be a big move down, allowing equities to rally at least for a little bit. And then if that breaks down, looking all the way down to 103, again, giving equities even more room. Obviously, this is still a bullish structure, but just some potential scenarios there for the dollar. Moving over to the volatility indices, MOVE index doing nothing, momentum continuing to tick down. VIX threw a wick to the upside on the jobs data and then continued to break down just like we would expect as equities were going higher. It did not break all the way down from this midpoint though. You really want to see it get below this trend around that 16 area, right at these highs going back to the end of August. So not super convincing to the downside. It does look weaker than we've seen, but really you want to see this start to break these previous levels. That would be more convincing in my opinion. In terms of my accounts, you can see I did okay, $650 on the day, a little bit more than $100 per dollar on the Qs. That's what I try to reach for. I did decide to roll up and out on those calls to 361 for $3. So that puts my max profit at 364. So we're a little bit above that already. Not $290 more. So if we stay in the same zone, that money should come in at least a little bit. Might end up rolling it out again on Monday. We'll see how that plays out. See if the bullishness continues. I did sell some puts earlier in the day and then rolled those out here to 361 for Monday for 74 cents each. And you can see I'm at about 50% profit on that already. And then I did pick up an IWM position at 174 for Monday. It did fall a little bit from that position, but not too much. And it is up a little bit after hours. We'll see if that holds up. Overall, not terrible on the day or the week. Let me know down in the comment section what you thought of the jobs data and the subsequent rally after the dip on the initial report. Does that mean we finally moved into a little bit of bullish momentum? Or is this short term and we're going to see a reversal early next week? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.